Stock markets took a plunge on Trump's tariff announcements, but recovered once those were delayed for 90 days. However, markets are worried that moving forward, a recession might not be avoided. This is a special report at xm.com, and thank you for joining us. I'm Cristina Marucos, and with me today is Haralambos Pissouros, our senior market analyst. Haralambos, it's pretty hard to keep up with the tariff news these days as Trump keeps generating new headlines. Where do we currently stand regarding U.S. tariffs?
Hello, Christina. Yes, indeed, it's very hard to keep up with the news as dynamics are changing day by day. So let's take things from the beginning. On April 2nd, the so-called Liberation Day, US President Trump announced a 10% baseline tariff on all imports to the US, along with higher duties on some of the nation's biggest trading partners. The 10% baseline duties went into effect on April 5th, while the higher reciprocal rates that kicked in on April 9th were postponed by 90 days in less than 24 hours. That said, China had a different treatment. Following the announcement by the world's second largest economy that they will raise tariffs on US products and proceed with restrictions on nearly 20 US firms, the US president raised the tariff rate on Chinese imports to 145%. Now, this Friday, the White House granted exclusions from tariffs for smartphones and certain other electronics imported from China, though Trump later said that the exception will be short-lived. Then, on Sunday, he said that he will tariff semiconductors during this week, although he added that there would be some sort of flexibility towards some companies.
This, of course, led to a small reprieve we saw in financial markets after this latest tariff exemption announcements. However, the fear gauge is still pretty high, with recession worries holding strong. Do you think we're heading into a global recession?
I believe that the market is still concerned about the recession, although such a scenario has not been fully priced in. Before the delay announcement, the 90-day delay announcement, JP Morgan, which was among the most pessimistic commercial banks, was estimating a 60% chance for a recession in the US, while Goldman Sachs was seeing a 65% probability. Although the chances have been lowered lately, both banks are seeing a 40 or slightly higher chance for a recession. What's more, the Fed itself appears in no rush to lower interest rates aggressively, with Fed Chair Powell saying a week ago that this is not the moment for a Fed put, the term used for actions to shore up the free-falling stock market, which suggests that the Fed is not quite anticipating a recession, although they are acknowledging the increasing risks. Now, Fed models that estimate US GDP corroborate that view. On the one hand, we have the Atlanta Fed GDP Now model expecting a 2.4% contraction for the first quarter, while the New York Nowcast is anticipating a 2.6% expansion. In my opinion, the market appears to be a bit more fearful than the Fed, despite the impressive rally on Wall Street we saw on April 9th. Fed Fund futures are still pointing to around 80 basis points worth of rate cuts by the end of the year. But although this is the case, investors are not certain about the recession, and this is evident by the fact that the US Treasury yield curve, let's say, is not inverted.
And speaking of Wall Street, it's difficult, I'm sure, right now to make safe and solid assessments, but how could we see the stock market move on incoming tariff announcements?
Yes, it's very hard to arrive to safe conclusions at the moment, but the fact that a recession is not fully priced in means that there may be more to digest should the trade landscape worsen. Not only could the US-China tensions intensify, but Trump could withdraw the 90-day delay announced last week, adding pressure on the US allies to deal with a new reality. In other words, if the tit-for-tat tariff game between the US and other major economies resumes, Wall Street may decline even more as investors become more convinced that a recession could be the case later this year. Now, the opposite may be true. meaning that the stock market could recover more ground if we get more headlines about tariff exemptions.
Haralambos, thanks so much. This was a special report here at exam.com.